Hi, Gary here. The Honorable Learned Hand was a court justice for the New York State Circuit Court back in the 30s and 40s. And he was famous for saying there are two tax systems in the United States, one for the informed and one for the uninformed. We want to be in the former. And many of you this past April may have had a big tax surprise because of the tax law changes that took place in 2013. And we know that successful investors, their number two major concern, this has been consistent over time, is mitigation of taxation. So of course we want to take a look at what happened in 2013 and this year as well, which really falls into three major areas. The first one is there was a tax bracket added of 39.6%. It's about $407,000 of taxable income for single and $457,000 for joint returns married this year, 2014. The second piece was they added a capital gains rate of 20%. Again, this hit that same threshold of $407,000 and $457,000. And then the third was this brand new tax called the net investment income tax of 3.8%, and it starts at $200,000 for single and $250,000 for married, and it's on all net investment income over that amount. So these three major changes, there were other minor ones, really made a big difference on income tax returns. And of course, the first thing you must say to yourself is, hey, I got to take a look at my financial strategies, my investment strategies, and so forth to mitigate these taxes. And that's obvious. That's something that you want to sit down with your trusted advisor, your financial advisor, to be able to do that with. Now, there was also estate tax changes that happened, and especially as it relates to being an Illinois resident. Now, from the federal side, the current estate tax exemption is $5.34 million per person. So if you're married, that's over $10.7 million. However, the state of Illinois has only a $4 million exemption. So if you're over $8 million, then there's going to be an additional state estate tax that's going to be added on. And Illinois also went from a 3% income tax to a 5% income tax a few years ago. Looks like that's going to be permanent. So when we talk about states without income taxes as other alternatives, the best one out there is Alaska. Alaska has no state income tax, no state sales tax, and they gave every person who is a resident of the state $900 from their permanent fund as a dividend in 2013. Now, after this horrible winter, you're not thinking of going north, you're thinking of going south. So whereabouts? Well, a lot of you have talked to us about Florida and becoming domiciled in Florida. Why? Because they don't have a state income tax, and they don't have a separate estate tax that's different than the federal tax. So that overall state taxes being paid is lower. Now, knowing that this is an important issue for you, we have putting on a live event on September 17th and 18th. You have a choice of the two in the evening about domiciling in Florida. It's a very important event for those who currently are residents, to make sure you crossed all the T's and dotted all the I's. For those who are considering becoming Florida residents, because there's a lot of specific rules around this. Now you can see the information here about where to go for this, and there's an 888 number to call to make your reservation. Sitting is limited, so make sure you call that number to make the reservation. We'll have a post next week as well, where we're going to have an interview with Rob O'Dell about some of the domicile issues around Florida. So watch for that post next week, and we'd love to see you at the live event. So until next time, enjoy.